Hey traders, Akil Stokes here from the Triple Threat Trading Live Ratio Room. Usually I post a market review video at the end of each week, but because I'm going to be out of town for the next few days, I decided to do something a little different this week. Now today was a great day in the live room, and I really got the chance to showcase what it's like to be a professional trader. And by professional trader I mean how I deal with my trades psychologically. So what I wanted to do for you guys is to go back and walk through our day in the live room and basically show you my analysis, entries, and thought process while I'm trading. Now the first trade we took in the live room today was New Zealand dollar. Let me get rid of this little educational stuff. And what I took was an aggressive C trade. Now the area I was looking at was right here around 79 flat. And I draw a line in there. Make that a little thicker so you guys can see it. 79 flat. And the reason I was looking there was based off my higher time frame analysis. Now before I enter each trading day, I always start off on my 4-hour charts and then scroll down from 4-hour to 2-hour to 1-hour to 15 to eventually get into the 5-minute charts by the time the session opens. Now on the 4-hour charts at the time, the market was right here, right around this 786. And what I was looking for was a cipher pattern completion. Now the question was, how can I get involved in that on the 5-minute charts? Knowing that the cipher pattern is a pattern that completes and wins 80% of the time, that's definitely an area that I was looking to get long at, not to mention we had some Fibonacci confluence and an even handle. And when I scrolled down to the 5-minute chart, we also had a potential aggressive C for a bat pattern. We had our X to A starting here, X to A, our A to B, and we're looking for our B to C, wrong tool, looking for our B to C to complete right down to this level 79.05, where if I bring in a Fibonacci retracement, you'll see we have a 786. Add that to the cipher pattern, which was completing at the time. I said, hey, this is a perfect level to get involved in aggressive C and take a trade going up, either completing a bat pattern and reversing back down, or maybe continuing to shoot up for extended targets. Now as you can see, the market blew right past that entry and stopped us out within about 3 candles. I think it has stops down here at 98 or 78.92. So within 3 candles, within 15 minutes of entering the trade, we were stopped out. Now again, 2 years ago, this trade would have killed me mentally. I would have thought to myself, oh man, I'm so sure that this pattern is going to complete. I'm so sure that I'm going to go long and make some money, and to be stopped out without even giving it a fight just would have been a big hit to my psyche. However, because I've been through that, because I'm more mature, because I'm more disciplined, because I'm used to how the market moves, and because I have confidence in my win ratio, movement like this doesn't bother me at all. So I shook it off and got ready for the next trade. Our next trade came on Euro Yen, and this was a real good one. Again, I started off by using my higher time frame analysis, and I'll go to my 4-hour chart again, look at Euro Yen, look at Euro Yen on the 4-hour. And what I noticed is we had our bat pattern completing from last week up here, looking at an X to A, A to B, B to C, C to D down here. And what happened was the market basically just channeled sideways, and you guys should remember me talking about this last week. When the market opened this morning, we were down here, and I'll have to reload my data. Okay, so when I came into the market this morning, we were right down here, oversold and below this recent structure. So as always, I expected a retest of this structure before the market can potentially extend down, which gave me the eye to be looking long Euro Yen. Now when taking that to the 5-minute charts, here's what we did. We came into the market when we were basically about right here. Let's see, 8 o'clock. Right here is when we opened our session and looked at the market. Now for this trade, I just used some basic structure analysis and saw this. Here was the latest structure high that the market had given us. Market had bounced below that, actually triple bottom down here, which would have been a great trade in itself, and then we shot up to create a new structure high. Now once I see this new structure high, I'm automatically thinking long, long, long. I'm thinking we create a new structure high, the market's going to come back, retrace, probably retest the structure zone, and then extend up. So as the market moved on, and I saw this move, and I'll just draw it out for you guys, don't mind this ABCD. But as I saw this move, here's what I did. We drew in a couple things. First, I drew in a Fibonacci retracement from this swing low to this swing high. Saw that, okay, we have a 618 right here at 94.50s basically. And we'll draw on a red line for that. I then drew in a harmonic move. And it's similar to an ABCD pattern, but because we didn't get that 382 retracement, I can't technically call it that. But an equal move from there, copy and paste that to here, which also completed bang, basically right at 94.50, 94.47. I then drew in a Fibonacci extension from that same area, swing high to swing low, right back up, and saw that a 1618 landed right at the same mark as our 618 retracement and our harmonic move, which is basically, if you guys watched the Forex market preview this week, it's basically the market telling you that there's money on the table and you need to grab it. So I entered aggressively at 94.50, got filled at 94.52, and as you can see, it shot up. But before it shot up, it did put us through sort of a mental test, and this was great for the newer traders in the room. Now if we look back, we entered on this candle right here in black. Market immediately shot right back down, just like New Zealand dollar, through our entries, taking us about 10 pips into the negative. And you know, I can see new traders saying, oh man, the same thing just happened on New Zealand dollar. There's a lot of bearish momentum. Why did we enter this trade? Why did I enter this trade? I'm automatically down 10 pips. I probably should just get out right now and save face. Only to have the next candle spike up a little bit and then push down even further, teasing and testing traders, especially new rookie traders, to get out of the market. We then played around a little bit, finally shot up. We got up about 15 pips, or 10 or so pips, between 10 and 15 pips, depending on where you got filled at, springing a whole new set of emotions. You know, now traders in the room are saying, yes, we're up 15 pips. You know, we're not near our targets yet, but you know, everyone likes it when we're in the green. We're up 15 pips. We're doing the right thing. This trade's going to win. I know it. And you know, all those winning emotions, thinking about what we're going to do with the money, how we're going to enter into our spreadsheet. You know, our equity curve is going to start looking good, only to have the market come right back down and retest our initial entries and even spiking below again. So taking us through the emotional low of being down, giving us an emotional high of being in the profit area again, only to take us right back down to break even or down a little bit. Again, testing rookie traders to get out. And I asked a few traders in the room, who got scared when the market did this? Who wanted to exit their position and basically stay out for break even and not get involved and just say, hey, I think it's going to go down because we already had our move and we missed it. I'm just going to get out and be safe. And a few of them said they did. Now the ones that have been in the room with me for the last few months, they knew better. They knew that the only reason the market does this is to test rookie traders. And as you can see, after this last test, we went up, hit target profits ones, right up here for about 39 pips, and then extended to target profit 2 up here for another 56 pips. So giving us 95 pips total on that one trade, basically tripling the amount we lost on New Zealand dollar. So again, a good risk reward ratio. We got 3 times the amount we lost just on this one trade. Next, we had 2 trades form at the same time, and I'm going to show you one of them. They're basically the same thing, but we had double tops. We had a double bottom form on Aussie dollar. Down, where do we get involved at? Down right here, it looks like. Let me erase some of this. I believe I got filled at, let me check my spreadsheet, filled at 102.53. So we're looking at right here on Aussie dollar, these double bottoms when the market came in, hit once here, retrace, hit twice here, and actually triple bottom. That's how we got involved right here. And just like the euro yen trade, it immediately shot right down, taking us into the negative. Now keep in mind, at the same time, we haven't won in the euro yen trade. So right now we're sitting in 3 trades. We have another one on Canada as well, but we're sitting in 3 trades, and they're all basically just playing around with us. We're not sure if we're in profit. I think euros around break even. Aussie dollar and dollar Canada are both below our double bottoms and double tops respectively, and sitting in the red. And it's looking like a bad day. It's looking like, man, we took 4 trades. We already had 1 loser. One of them looks like it may do okay, but the other 2 look like they're going to lose right away, and this is just going to be a horrible day where everything just snowballs. Now again, as the market broke through, it tested our rookie traders. Our stops were safe, but it tested rookie traders, saying, hey, how much can you deal with the pain of being in the red? Can you stand it? Can you stay with it? And I'm pretty sure some traders exited. But the professional traders in the room, the ones that had a plan, the ones that had a set guideline of rules to follow, the ones that don't get scared out of trades anymore, they stuck with it as we double bottomed again, giving us even more RSI divergence, and then shot up for target ones, rewarding you. And the traders that stuck with it, that didn't get scared, were rewarded for their patience. And I think we made about 25 pips on a target 1 for Aussie dollar. I just recently got stopped out on trail stops, and dollar CAD was similar. We had a double top on dollar CAD, not as much pain. We're looking at this area right here, so pretty much a pain-free trade. It basically retested. We got short here and it rolled right over for another, I think, 34 pips total. But the point is that today was a day where professional traders succeeded and rookie traders or nervous traders got taken advantage of. And this happens time and time in the market, and I was so happy that we got a chance to witness this live in the room, because this is what builds a trader's confidence. You don't build confidence by having the easy trades that you enter and then a big candle forms and gets your target within a few minutes. Those are the easy ones. Anyone can sit through a straight up winner. The ones where you really have to fight and battle and claw and grit your teeth and kind of hold your hand back from clicking the mouse and taking your trade off for either less than what your target should be, or taking it off for break even, or moving your stops down lower because you really think it's going to win that bad. Those are the trades that build confidence. Those are the trades that professional traders are built off of. Unfortunately, I had to experience that the hard way by losing a lot of money. But now I have those memories in the back of my head, and I know that no matter what, I do not make those mistakes again. And that's one of the main reasons that I've become successful now, or consistently successful now. I don't make those mistakes. So I'm glad you guys got a chance to see this. Hope this was somewhat informative or educational. And I'll see you guys back next week for our normal C2T live room weekend review. Take care, traders.